Hi there, welcome. This is the daily stock report for Monday, January 11th, 2021. You see by the chart right there, I'm taking a look at Fiverr. Now, this is a company that I have used many times in my small businesses to get freelance graphic design, PDF formatting, logos. I've just used this many times. It's a company that specializes in bringing this kind of freelance talent to small businesses where maybe you don't need to hire somebody. And it's just a really great way to get started on that. So that's what they do. They're an Israel-based company. You can see that right here. And it's a pretty recent IPO. If we go over here to a weekly chart, you see it went public in June 2019. So I like that aspect of this stock. It tells you that it's still young, has a lot of room to grow in these early years. This is really exactly the time you want to start putting a stock like this on your watch list. Not when it just goes public. Forget all that. I know everybody wants to jump on with these IPOs. Don't do that. Track these stocks after they go public, after they pull back, just like Fiverr did here, just like every IPO does. Then it starts its ascent right here. So let me go over here, and for those of you that are not familiar, just wanted to show you this is my home page here, just based on jobs that I've searched or jobs that I've assigned. Here's somebody I hired over here for PDF and book formatting. This person did a great job if you ever need that. I think I was looking for some VA things. I think I've been looking for some development, right? Book formatting, book covers. So you do see there's book design, VA work, audio editing, video editing, DocuSign templates, flyers, posters, audio transcripts. I think you get the idea. And if you have a small business and you need some help like this, I would really suggest going there and checking it out. So I'm recommending it as a company, not necessarily the stock. I want to make that very clear. I do like the stock, but I'm recommending the company, not recommending the stock as a buy right now. I'll get into that. So here we go. Let's go back over to the chart here. And let's explore some of the earnings and sales, what's been happening. So you see over here, for the full year of 2020, and the company will report earnings sometime in the next few weeks, the fourth quarter earnings. You see over here, analysts expect 27 cents per share. That's the first year here that analysts are expecting a profit. Well, what happened in 2020? We had a lot of people with their own businesses, maybe leaving corporate jobs, maybe due to no fault of their own, people working virtually. The timing was right. This has been a company that was laying the groundwork for years, and then all the events of 2020 came along and did provide a good framework for this company to start growing in leaps and bounds, as it did. So if you come down here, you see there we have the first profitable quarters right here. Now, sales have been very strong all along. That's kind of what I mean by laying the groundwork. It began this a few years ago. And you see strong double-digit sales gains over here. In fact, some quarterly acceleration recently. In the past 1, 2, 3, 4, 5 quarters, you've seen sales accelerate. Very good sign. That is what you want to see. Now, in its earnings release from the third quarter, when it reported this sales of 52.4 million and earnings per share of 12 cents, let me read you what it said. It said, "We continue to execute and drive results as the global shift towards digital transformation and remote work accelerates." So there you go. Now, the company did launch some new features in late 2020, including recurring gigs. That's something that Upwork, which is kind of a competitor of Fiverr, has been doing for a while. So there's a lot going on over here, and this company will continue to evolve and grow. Bears watching. All right, let's look at the chart. So you see, we're on a weekly chart right now. Look at all this consistent tracking higher. You had a little blip back here, and that was in November, kind of right around the time the market itself was a little bit wobbly. and you had right here in the February, March global market pullback, of course, when the pandemic began to be a concern, this stock pulled back 42% from peak to trough over here. Now, pro tip, do not benchmark a mid-cap stock, which this is. You see that? It's got a market cap of about 8.159 billion. That actually rose today because the stock has been up since I checked this earlier this morning, so it's up from earlier today. Do not benchmark a mid-cap to the S&P 500. Can everybody say that all together? Do not benchmark a mid-cap to the S&P 500 unless you're trying to show that mid-caps perform differently. But if you really want to benchmark this against its own asset class, you want to look at the S&P 400. And I did check it against that. The S&P 400 is the mid-cap index. That fell about 44% during this time frame here back in February, March 2020. This stock was 42%. I'm going to call that even. I'm going to call that they just tracked pretty well even with each other. Okay, good sign. Should you buy Fiverr now, the stock? That's the big question here. Okay, no. It's extended right now, right? It's just, let's go back over here to the daily. So it's just off its all-time high from Friday's session, and it's actually tracking a little higher at this moment from the closing price on Friday. Very extended above that 50-day line, even extended above the 10-day line. What's the problem with buying extended stocks? You might get shaken out. And it's just sort of the problem of why buy when something is already way extended out of a consolidation? And frankly, this one has not really consolidated in quite some time. You had some moving average pullbacks. Not really a good shakeout to get rid of some weak holders or some of the big institutional buyers that are taking some profits. Don't mess with that. Don't create sort of the stomach upset for yourself, the headaches for yourself of watching a stock that you bought at highs and then it's pulling back again, okay? So you want to watch out for that. Now, in a situation like this, please don't get FOMO as you're watching it trend higher. Remember, it's a new stock, lots of good expectations for its future business here, just in terms of intuitively, you know that, but analysts agree. Does seem like this one is on a roll. I mean, it is. It not just seems like it is here with the sales, with the earnings. You're not going to most likely, and I'm not a big predictor of the future when it comes to stocks and markets, but you can look at performance and see what they're likely to do. This one does look like it has a good future ahead of it. Don't get too much FOMO. Wait for it to pull back. Keep it on your watch list. That's something I'm doing right now. And let's see where it goes. We can come back and revisit this as it stages a good pullback or consolidation in the coming weeks or months. All right, thank you so much for watching, and I'll be back with another video for you tomorrow.